The video will explore investment strategies considering the current market conditions, especially for those nearing retirement. We'll dive into evaluating your current allocation, discuss proposed strategies involving VTI and VXUS, address market timing, explore pros and cons, and finally give some recommendations. It's essential to understand your current investment allocation, especially if you're nearing retirement. Many target date funds, TDFs, are already stock-heavy as retirement approaches, so you may not need significant adjustments. One proposed strategy involves having 70 to 80% of your portfolio in VTI, which represents the total U.S. stock market, and 20 to 30% in VXUS, the total international stock market. This strategy aims to capture potentially higher returns, but higher stock proportions inherently carry more risk. Global exposure through VXUS adds a layer of diversification. Now let's see if you've been paying attention. What are the two stock market indices involved in the proposed strategy? Is it VTI and VXUS, SPY and QQQ, or DIA and IWM? You may pause the video now to think about the answer. We'll discuss it in the next section. If you chose VTI and VXUS, you're spot on. VTI covers the total U.S. stock market, while VXUS gives you international exposure for a diversified portfolio. On the pros side, diversification is achieved through international exposure, potentially higher returns are a possibility with more stock allocations, and you get greater control over your asset management decisions. On the cons side, increased stock allocations mean higher risk for potential losses, managing the portfolio involves periodic adjustments, and generally, this strategy demands more involvement and management. Here are your recommendations. First, evaluate your current target date fund stock-to-bond allocation. Then, explore the foundational three-fund portfolio approach, incorporating VTI, VXUS, and bonds. It's crucial to assess your risk tolerance, especially considering market volatility. Lastly, be prepared to educate yourself and adapt over time if you decide to manage your investments personally. Let's wrap up with some final thoughts. Firstly, while target date funds, TDFs, offer simplicity, they may also limit potential returns. Opting for an investment strategy involving VTI and VXUS will require more active management. Be sure to align your strategy with your risk tolerance and investment time horizon. Thank you for watching our video. We would appreciate it if you could like, subscribe, and share your thoughts in the comments below.